day all. Ira Epstein of Linn Associates with your agriculture update for this Thursday, and we are now at the 13th of June 2019, just after 3 p.m. Central Daylight Time. Well, for those of us in the Midwest and mid-Atlantic states and so on, you know the rain that's going on. It's just nonstop. It comes, you get a day or two of a break, and then it comes back again. We're at the point in the corn market where I would say whatever's going to be planted is planted. And those areas that are still waiting, probably not going to happen. I think it's pretty much over on that part. Now what puts at risk is the soybean acreage. How much of that may be lost? Then we go into the next phase, because these are weather markets, and that is with cool temperatures, and that's what we've had in most of the areas. When does it warm up? And believe me, it will warm up. This won't be without a summer. It may be shorter, and we've lost growing days, but the market will heat up to a degree. Whether it gets hot, I don't know, but that's going to be the question for beans, because what happens in beans is now that we're coming to the second part of June, basically the middle of June at this point, there's still time to get those in, but each day that goes by, you've got to think of frost. When does that come later in the season, and will it impact that market? So there's things in a weather market that you go through stages. A lot of people are already talking corn up to the $5 mark. So you've got to keep that in the back of your mind. Tanker attack today in the Gulf of Oman, and you can see how the energy prices reacted. You won't get that reaction out of nat gas. That's going to look at current temperatures and figure out when the next warmth is coming into the market. The stock market, if you were looking at this market 15 minutes ago, the market was in the Dow maybe up 20 on the day. It rallied in the last few minutes, a summertime pop, I'll call it, and finished up sharply higher. And then you started selling off in the bonds and the notes from their highs. Interesting day. So as we look at the soybean chart for the week, we're up 31 3/4 cents. Weather market, yeah, you've got one on your hands. Now we've got a market that's in an up thrust. You can see that going on. The bias is up. The market might fight a battle if it pulls back around that 873.5, the 18-week average of closes. Right now, at this point, I doubt that you're going to fill this gap right in through here. Do you see that? It's this gap that was filled, and now the question is, if the market ever sets up like it comes in over a weekend and the temperature's bad and you get another gap, so you would have a breakaway gap, this wouldn't be a runaway anymore. You can't get that. That's my point. You can't get that type of chart action of a gap, a breakaway gap, a runaway gap, an exhaustion gap. Can't get any of that going. You could just gap in the market. When I look at the swing line, it's interesting what's going on. You had a vertical price decline where you went from 21 1/4 to 875, and here we are back at 915 1/4. And notice the action. They were just straight down moves and straight up moves. Fascinating. When I look at where the resistance is, I'll stick with what I know. So far, it's the 100-day average in terms of moving averages, supports the 18-day average of closes. You're trading between those. And if you clear the 100-day, well, what's going on because of this up thrust is the market on the Bollinger Band math will start moving higher on you, just the way it did when you were breaking here and it was coming down. So you've always got to pay attention as to how these things work with each other. I'm looking for the 100-day average to the upper Bollinger Band to be resistance points, but this market is just vertical and moves, very hard to catch. When you look at momentum, the momentum of the market is overbought. So I have an overbought market with upside bias that isn't trending and coming back into a resistance zone. When I look at the meal market, the pattern here has been one of lower highs, lower lows, but that's been countered because the bias is up. The market had one test here that lasted a day and a half or so of challenging the combination of the 100-day average and the 18. You had a bullish crossover just happen in the market. That's when the shorter term average, the 18-day average, gets over the longer term. That occurred yesterday, and you're getting follow through from that movement to a degree today. You're up $2, not dramatically higher, but higher. When we look at soybean oil, you just hit the upside resistance of the upper Bollinger Band. So now this market's got a pattern of a lower low, higher high, caught in this sideways action. Some traders are saying, gee, why not try to get the oil? If the meal and beans are good and stay good, this market might catch up. Maybe. I generally find buying the weakest part of a market complex that's on a crush spread and trying to make that work the way that the parts that are bullish, it generally doesn't work out. So I'd be a little cautious. But as a pure technician, take the name off. Every time you hit the upper Bollinger Band or the lower band at first, and you go back on this chart and look, that's where I think pros try to take some money off the table. So that's what I think was going on today. That doesn't mean it can't go higher. In the corn market, you are overbought in an uptrend. Resistance, the upper Bollinger Band in the 464 area. Is this going to be one of these markets that just moves higher, gives you very short-term breaks to buy into, and then keeps going? Well, it's a weather market, and that's the nature of them. In the wheat market, you're making a move towards the upper Bollinger Band, overbought condition, uptrend. So I won't be surprised to see that on a Friday, if you get up to those upper Bollinger Bands, that you run into resistance in these grain markets. In the sugar, you hit your first upside target since going back down off the Bollinger Bands, and now you're back up to a resistance point. But what rules the day is this: the embedded reading. Until it's lost, the pullbacks in the market, I contend, are being bought by the pros, and this market had something of a sideways action right here, used it as a base to move higher. Coffee can actually turn bearish again tomorrow, and the reason is this whole reaction down to the 18-day average found some traction. We had just talked yesterday that the market was caught between that 18-day average. I'd look for resistance at the 100-day. You went up today through it and right back. Now, if you get under 103, what is yesterday's low? 103.10. 103.05, and stay like that, then you've got the lower highs, lower lows under the 18-day average, so the bias would be down. This is where everybody's fighting each other right now, looking to see what's the next event. The correction went down to a zone that had found support. Does the market break down and re-enter a downtrend, or does the market try to whip itself around here back and forth as it tries to figure out, can it get into an uptrend? In the cocoa market, you got up to the upper Bollinger Band, and you're starting to get a little bit of a correction out of the market. But I look at this. If you take a look at the slow stochastic, both numbers are over 80 today. Both numbers were over 80 yesterday. Both numbers over 80 the day before, not the day before that. So on Monday, they weren't there. That gives you 3 days in a row. That tells me that until the red line closes under 80. I am expecting on this pullback that the buyers show up in this marketplace. If they don't show and this red line gets under 80, I think you're going back to the possibility of challenging that 18-day average of closes, what I call that line in the sand, a neutral number. In the cotton market, trying to get a rally back up to the 18-day average. Again, that line in the sand, the resistance. You'd have to take out on this rally 67.08, about 33 points higher. Let's see, you're finished today at 66.43, so no, I'm wrong on that. It's about 65 points higher. You got to take that number out to negate the downtrend. The market, if you take a look at where you're at in the stochastics, tomorrow I would expect that if the market opens steady to higher, you're not going to be in oversold territory. Be interesting to see what happens there against that 18-day average. In the cattle market, this has been a whipsaw market. And part of it has to do with grain prices, because feed prices, hog prices, everything's getting hurt as we have that. And by the way, you would think that China's buying a lot more hogs. Isn't the case. I saw today the export numbers from the U.S. there, and remember, they own Smithfield, so they can take those in. But the total exports out of the U.S. don't look that big to them. Got a higher high, a bit of a lower low there, not trending. Feeder cattle ran into that 18-day average of closes, what I call that line in the sand, and it stopped the rally. You're in right now a pattern of a higher high, lower low. I don't see a trend out of that. And in the August hogs, you've been in a downtrend, and you've been in one rather long time. no demand for that. I also noticed today, by the way, in soybeans, that China had bought some beans, and then they said they're not going to buy anymore. They want to take them, but they're moving them from now. They say they want to take them in August. I don't know why, but that's what I read on the news wires today as we were going through everything. You know, I talk about this and a lot more in my own market research. If you're like I am, I don't want to be bothered reading news stories that are, how do I say this in a nice way, pages long, information I'm probably not going to use unless I'm on television and somebody asks me a fact about something. I want to know, hey, there's reports coming out tomorrow, here's the estimates, that's what they're looking for, and then I want to get the highlights. So when I put together what I do, I highlight in my writing. I back it up in the morning with a morning video. And in that video, I prepare my traders, if you will, for ideas on chart action, what's going on, did anything come up, be it in Asia, Europe, as we get going. I typically get up 5 in the morning, do a full morning read, and then I'm recording something between 5:30 and 6:15 in the morning, that's Central Time, and my videos come out pretty soon, sometimes before 7, sometimes right after 7 a.m. The idea is to get them in your hands before the market opens up in the morning, because the first, when I say open, I'm talking the government reports come out. They typically start coming out at 7:30 a.m. in the morning, and if there's anything important, I've got you all prepped for it. If you haven't had access to my research in the past, you might want to give us a call. Go to our website. You can sign up for our free offers there. Away you go. You can always click up here. It'll take you right there as well. I'm Ira Epstein. You have a good day. Talk to you tomorrow.